Hey everyone, Chris Lopez here, back with another episode. And in this one, we're doing another interview with a contributor in the 2020 Guide to Denver Real Estate Investing Strategies. So my guest today is Joshua Erney. He was in the 2019 Guide and also in the 2020 Guide. So we've had lots of conversations stemming from our investing and personal finance strategies. He's written the book, so it should be a fun conversation talking about real estate, and we'll probably dive into some other just investment assets as well. Josh, glad to have you here, man.
Yeah, absolutely. Thanks for having me, Chris.
Yeah, so give people just a quick recap. Because I imagine some people haven't read the chapter yet, but quick recap of who you are and what your investing strategy is.
Yeah, sure. As you said, my name is Joshua Erney. I am 29 years old. I'm living in just north of Denver. I work in IT, specifically around a product called MuleSoft. So I just specialize in software integration, essentially. And I do independent contracting around that. As far as my investing strategy goes, it's currently a combination of three different things. So I have real estate, currently just the house that I'm living in now. And we'll talk about like how I purpose that as an asset.
You're house hacking it.
Well, I was, yeah.
Yeah.
The life insurance, and then stock market investing, primarily in ETFs, mutual funds, etc. Right. Some more low risk stuff in that area.
Well, let's start with the house hacking one, or the real estate and the house hack. Because, what was interesting with this was, this book came out, got published in April, and right around mid-March, I got my first printed copy to like the physical proof to review it. And it was a couple days after Governor Polis locked us down, and we just got locked down. So, well, that's, two things. It's going to kind of squash the plans for doing some book promotions on doing in-person events, which I really wanted to do. So we pivoted to doing these interviews instead. But also, as I read the book, I was like, yeah, no one's strategies have a plan B in here for a virus pandemic.
Yeah.
So you bought your house, I think it was like 2 years ago, right?
Yeah, 2 or 3.
Yeah. And I know, tell us people like just how you bought it, location, the remodel of it, and then we can talk about what you're doing until COVID hit and now what you're doing now.
Yeah, so I am just west of 25 up by, I believe it's 80th and 84th. I bought this house with an FHA loan. It was the first house that I purchased, so I put a really small amount down. But because of that, I wound up having that private mortgage insurance, and still have it today. So
you have it forever until you refinance.
Yep, exactly. But I mean, it would be a great time to refinance. I just got to get some other things together.
So yeah, on a total note, are you going to plan on staying there for the year or so?
I'm still deciding. I'm not sure. I know, at least as far as living here long term, it's not something that me and my girlfriend Amanda are too jazzed about. So if we would be moving, we would be picking up and moving into another house and then renting this one out.
I would definitely, because I've talked this with just a lot of people last couple months. Yeah, look at refinancing right now, because if you're still living there for another year, you should be able to refinance it conventional, no problem. Mm-hmm. And possibly get rid of PMI or prepay it, or at least they'll drop off after a couple of years, and good chance rates are lower than what you have.
Yeah, because it's pretty brutal. It's something like $200 some a month last time I checked.
Yeah,
it's quite a bit.
But it's a great trade-off for buying a place for 3.5% down. I mean, that's the reality of it.
I feel it was absolutely.
Yeah. All right. Anyway, so back to that. So you bought it, got the FHA, and I know you guys did some, with the idea to Airbnb it. And I know you guys did some pretty extensive remodel work in the basement, if I recall.
Yeah. So when we bought the house, the upstairs was move-in ready, and the downstairs was, I guess, like legally move-in ready, but it was not good. So we wound up pulling up all the tile from the basement, redoing the floors, painting, just getting it ready to get some furniture down there and do an Airbnb. It already had 2 bedrooms in the basement, its own separate bathroom. We could build a kitchenette and and essentially the living area. And that's what we did. And it wound up being, we started that August of last year. Only regret though was that I should say I didn't get everything together more quickly. There was a lot of money to be made, is what we found. Given the location that we're at and the price point that we were on, like the lower side, we were booked almost 100% for August and September, mostly for like Red Rock shows and things like that.
Mm. So when you did the work, did you do the work yourself or did you hire contractors?
Yeah, we did all the work ourselves.
Okay.
And what hired a contractor for like one or two things, but nothing major. It was like baseboards, and that might have been it actually.
Okay. And so, like, what type of talk about the numbers here on the house hack? Because you're, like, what was your vacancy rate or occupancy rate, and like, what's your average nightly, charge?
Yeah. So we started average nightly at $100, and we could take up to, I believe it was 6 people that we could get down there, because we had a, what's it called? A fold out couch, futon.
Futon.
Yeah, futon, and 2 bedrooms. So we could get 6 people down there for $100 a day. Right before COVID hit, we had started increasing the price on that, because the fact that we were booked 100% of the time in August was like a pretty strong indicator that our price was too low.
Yep.
We wanted to have some vacancy in there. When we started getting into the winter months, we kind of predicted that we'd get some ski traffic. Maybe people that just flew in from Denver late or flew into Denver late and wanted to stay at a place before they drove up into the mountains the next day. That didn't really happen. It maybe happened once or twice. So the vacancies in the winter months were closer to 50%, whereas in the summer we had almost 0.
So what about once COVID hit? Are you getting traveling nurses in there? Are you doing medium-term rentals, or is Airbnb stop for you? Like, what's the experience now with COVID?
So when COVID hit, we just watched all of the reservations for the 2 months afterwards cancel. Slowly but surely. Just every week somebody would cancel. And then recently we had them start coming back in again, because we still had the Airbnb listed. But at that point we had already decided to close it down and repurpose the basement for some other stuff, because when COVID hit, my girlfriend lost her job, so she started looking for other ways to make income and decided to start creating yoga videos, doing not just yoga videos, but she does all kinds of stuff, powerlifting, yoga, just strength sports in general, and doing videos around those in the basement and kind of turning that into more of a studio space.
Oh, nice.
Yeah.
So that was, and are you guys planning on keeping it like that, or you think it'll turn back to Airbnb, or unknown?
It's unknown right now, because it might be by the time this stuff turns around, we'll already be in the process of moving. It really just depends. There's not really a long-term plan there, because really neither of us see ourselves in this house long-term anyway. Yeah.
Well, you bought it with the mindset of a future rental property, right?
Absolutely.
Yeah. I mean, that's, regardless, like most people don't hit a home run in their first house, especially buying a first rental property. Yeah. It's not a dream home.
Right. Yeah. So we just bought it with the intention of living here at least a year, and then whatever happens after that.
So what is your plan going forward as far as real estate? Are you just doing like a house hack number 2, house hack number 3, going towards traditional investing? What's the plan?
So the more we've talked about it, I think the more we've settled on probably the next place we buy is a place that we'd like to stay in for, let's say 5 to 7 years.
Okay.
So what we would be doing is moving out of this house, moving into that one, and then renting out this one. And then from that point forward, the rest of the houses bought we would stay in the house and buy the other ones with conventional mortgages, 20% down, etc.
Yep. Okay. So let's move on. I know, talking stocks, because I'm I might be confusing conversations that we had a long time ago, but you were pretty active in the stock market for a while, right? Or at least stock picking, I should say.
Oh yeah, I was thinking about day trading and everything, and I had set up like a plan for that on how I was going to make that happen, and at some point I thought I was actually going to make like a program that could just sit there and make money for me. And
the mythical black box.
That's exactly what you said when I told you. Yeah, so you're going to go make your black box, and I was like, yeah, we'll see how it goes.
I actually tried that like 10 years ago with a couple of business partners on foreign currencies, and we legitimately spent like a year and a half on it, and it never worked.
Well, it's interesting because you try to like make this program react to like human irrationality, right? And it just doesn't. Programs aren't flexible like that. Even with AI nowadays, it couldn't make it work. But I never really dropped any money into that. I just quickly found out through even through what's it called? I forget the names of the accounts where you're not actually trading money, but it's just it's fake money that you're playing with in like a particular market.
Yeah, just like the paper money trade accounts.
Paper money, exactly. Even with that, I found that the emotion, I wasn't ready for the emotional aspect of like putting that money at risk, and it wasn't even real money. So at that point, I knew I was like, this is not something that I should be pursuing as an alternative. I was thinking about it as an alternative to a job.
Yeah,
like that's probably not a good call. I'm losing money. I'm frustrated. It's not even real money. And it's just not working out. So, but I learned a lot about, especially risk management through learning about day trading. So it wasn't all a loss. It's very. I gained a lot from it in a sense.
I mean, it's been. I mean, I haven't looked at the stock market in years now, or thought about day trading for probably a good 10 years. Yeah, I remember the emotional, but also like, I don't know, and maybe this was just me, but man, you just get the thrill because it's basically gambling. Like it's calculated gambling. You get the thrill of gambling, and it's fun. Like I do miss that because it's fun.
See, I don't even like gambling, so
I don't like gambling unless I know the odds, I know the rules, and cool, I can have like my probability was like I always go for like a 3-to-1 risk to reward ratio. Because my baseline is, hey, I'm gonna win 50% and lose 50%.
Right.
You should probability wise, you should be 50-50. So if I take trades that are most likely going to make me like a 3x or a $3, for every dollar stop loss limit, I'd have a $3 profit limit.
Right.
And that was on paper. I mean, never really executed. I made a couple bucks, but nothing worth my time invested in there. But oh man, I remember the emotional thrill of it. It was fun.
Yeah,
I enjoy it. Like it's not profitable. At least not for me.
No. And it's not, I don't think it's a sustainable thing,
No. I've met very few people that could do it, but most people I hear, like even if they go full time on there and they have the money, 3-4 years later, their accounts are basically still flat or sideways.
So
and it's just really hard to do. They got like the high frequency traders now that just all about speed, and they're, literally rocket scientists that have built their trading programs, and they're just way smarter than me. So what's your investing strategy now? So like you were doing that, and I recall your plan was to trade and then take some of that money and use it as a down payment in real estate too, right? Hey, take some of the profits off the stock market and throw it into real estate, right?
Yeah. So I decided not to do that, mostly because what I was doing was I started with ETFs. And then I started getting a little greedy, and I was like, yeah, I'm going to start investing in individual stocks like Amazon, Facebook, Tesla, etc. But like emotionally, I couldn't handle the volatility of seeing just like the number go down, and being like, yeah, it'll probably come back up, because I really didn't know. I was foolish, and I didn't really do the necessary research on these companies to really have the confidence that they were going to get through these downturns. So that was something I learned from that. I decided not to go that route. Instead, I just have whatever I'm planning on putting on for a down payment on a house into a savings account, and I just use that instead.
Okay.
And one of the reasons I was doing the approach with the stock market and trying to use those gains to kind of accelerate being able to make a down payment on a house was because my income wasn't, I guess, very high, or as high as I had wanted it to be. So instead of kind of taking the risk in the stock market, what I decided to do instead was take that energy and put it into me being able to consistently make more money on a day-to-day basis with my 9 to 5.
That was the same conclusion I came to a long time ago. It's just, yeah.
Yep. And that's been a lot more effective.
So what's your new strategy? I know you mentioned, I think you said at the beginning, like ETFs and stuff. What type are you buying? And are you simply just buying and holding, or are you picking sectors? Are you swing trading? Like how sexy versus simplistic are you now?
It's not sexy. It's not sexy at all. I try to make it as simplistic as possible because it's something that I really don't like to have to think about. I prefer to save my energy for other things. So what I do is I basically have a large cap ETF, a small cap ETF, and an S&P 500 ETF. I invest in each one of those equally. And
you're just doing a third?
Yep, and it's just buy and hold.
Well, how'd you come up with that? Is that the? I know there's all sorts of like portfolio templates out there. Is that one of the ones from like Bogleheads or?
This one, I think I picked up this one from Millionaire Teacher.
Okay.
I think that's it. Yeah. And that was one of the first books I read that kind of got me. I think I referenced it in the 2019 book. That's one of the first books I read that got me kind of thinking about, wow, I don't have to work until I'm 65, and I have enough for retirement. I could really kill it right now and retire in 10 years if I wanted to.
And is that all the stock stuff are you doing, like IRAs, 401ks, or you're still doing some after-tax brokerage accounts?
Yeah, so I do. I had a traditional IRA when I was working W-2, and a Roth IRA that I was contributing to as well. But now I'm doing a SEP IRA.
Mm-hmm.
I'm independent, so I'm doing that instead. And I think I'm just outside of the income bracket to contribute to a Roth anymore. So It was kind of sad because that's like a really exciting tax benefit with the Roth IRA. So it was kind of bittersweet.
It's a good time to do a Roth conversion.
What? How do you mean?
Well, you can, if you got like your traditional IRA, you can actually convert that to a Roth IRA.
Okay.
Yeah. So Google, and there's two things. Google like Roth IRA conversion, and if you want to get really fancy, do like a backdoor Roth IRA. But the conversion there is just helping to. I know a lot of people are doing it now because their expectations, since taxes are very low right now from the tax cuts 2 or 3 years ago.
Yeah.
They're like, hey, Graham, I'll do that. So basically, it's just they have some formula there based on how much money you have in that versus your Roth. There's all sorts of rules there, but you can convert it, and then you pay the taxes now,
right?
And you can either, I think you can actually pay it out like your non W-2 income if you wanted to, or I'm sorry, your non IRA income, but then you convert it over to the Roth, pay your taxes now, and then it's all tax free down the road like a normal Roth.
So I can use the money in the traditional IRA to pay the taxes for the conversion.
I believe so. I've not done it, and it's been a long time since I read the details on there. I was going to a year ago, but I decided not to for just kind of laziness reasons.
Sure.
And I realized it's like, I've got so much in Roth. I'm buying all real estate now. I was like, I might as well leave some money in like those other tax vehicles just as a hedge.
Yeah.
But yeah, no, you can do that and convert it. I know a lot of people are doing it.
I'll check it out. Yeah. Thanks for bringing it up.
Of course. I mean, I
learned something new every time I talk to you.
So let's talk about life insurance, because we've had some fun debates about this.
Yeah. So
what are you doing there?
So I have a whole life insurance policy that I set up a couple of years ago. Maybe 1 year, 1.5. So I contribute around $1,000 to that a month. And with whole life insurance, the idea is, as opposed to term life insurance, where once the contract expires, everything you've put into it is gone. Whole life insurance is, how do I explain this? You eventually get that money back. The way it works is the money is not directly invested in the stock market. So what it does some fancy things with options so that it experiences the upsides of the stock market, although there is a cap on that. Yeah. So if the stock market rallies 20% in 1 year, I might only see 12% of that. But I can't lose any money essentially, except for to fees and all that kind of stuff. So, I made sure to think hard about this before I came on to the to this video. And so here's how I feel about it now. I think purely from an investment standpoint, if you're just trying to grow your money, it absolutely does not make sense to do a whole life policy. Honestly, this is seriously just what you told me when I was thinking about it. But if you want life insurance and you also want to grow your money over time, a whole life insurance policy might work for you.
Yeah.
So in a way, it's a little saddening from like a growing money perspective, but it's also very reassuring to know that like a big part of the reason that I'm even trying to grow my wealth to begin with is being able to take care of my family. And if something unfortunate were to happen to me, it makes me feel a lot better knowing that they would be taken care of in that event. Because I didn't have any life insurance through my job. It was a relatively small company of maybe 50 people, and they just weren't at that stage of maturity where they were issuing people term life insurance.
And so is your plan? Because I know a common plan when people buy these whole life policies is to use it basically as like their asset, and you can borrow money generally fairly cheaply against the cash value on there.
Yeah.
And then a lot of times I know people go thinking, hey, they use that to buy a car, to go out there buy real estate, also. Do you have plans on using that cash value and borrowing against it to use it to go buy real estate or other assets?
Possibly, but the way I'm thinking about it more recently is just more of a retirement account.
Okay.
Instead of using it to pull out and invest in something else.
So kind of going forward here with what you've experienced here with the couple years of house hacking, the COVID stuff.
Mm-hmm.
Has the experience and the COVID, has any of that changed your long-term investing plans? Any big changes or ahas?
No, not at all. So the company that I work for now is a real estate company, and unfortunately I can't really say much more about it than that. But just looking at how their finances have been through COVID-19, it's like shocking how resilient the real estate market really is. There were issues with like showing houses, and I'm looking at this chart and seeing that the amount of showings has gone down, but then once COVID-19 started to subside again, it was like all COVID-19 was a dam on all of those showings, and then it just exploded when they started going down, when cases started decreasing again. So in terms of my investing strategy, COVID-19 hasn't really changed anything there at all long term. But short term, it certainly has forced me and Amanda to make some adjustments.
Yeah. Cool. Well, I appreciate you coming on the show, and hopefully you'll be in the 2021 edition again. Have you back as a contributing. Now, if people want to reach out to you, do you want people to connect with you, bounce questions around, network?
Yeah, absolutely. I would love it if anybody reached out to me. So you can reach me at Journey at journey.io. That's JERNEY. You can find me on LinkedIn, Facebook. See, those are the only two I'm on anymore. So
Got rid of the other ones.
Yeah, Twitter was making me real sad. So I just got rid of it.
Yeah.
I remember it was when that like World War III thing started happening, when we were worried about North Korea launching nukes at us. And I was like, yeah, this is it. I'm done with Twitter.
Yeah, they can go down some. I mean, all that stuff. The whole internet can go down some nasty rabbit holes.
Yeah.
Awesome, Joshua. I appreciate you coming on the show. Thank you so much.
Absolutely.
If you guys reach out to him. His email address will be in the contact notes. His contact details will be in the show notes.
All right. Thanks a lot, Chris.